The second lesson, very important lesson, is that given the fiscal constraints of African states, in which many of them are not able to fund the national digital payment, national digital public infrastructure, we had a unique situation in which a consortium of banks had to put in the money to start Nigerian tax defense system. One of the big questions comparing to India and Brazil is that it's the ownership structure of the bank settlement system. Does it create a tension between public good and private enterprise in terms of profit? Because it's the banks that are governing NIPS. What kind of questions are the governing board of NIPS asking it? Is it a balance of public good? And are they asking sufficient public good questions? And when you also remove that to the compensation of managers in NIPS, if it's driven by revenue and bonuses, what exactly would they drive? Why they have tried, we have to commend them. But the hard lifting, for example, of finding this 40 million people missing between identity and payment, would the incentive be strong enough to go and find those people? Because this actually correlates to the poorest of our people. People who do not identity or payments are also the poorest of our people. Is it worth the commercial wire? These are some of those questions that the world can learn. We see that as it's actually commending the pragmatic solution to the fiscal constraint of government. We must recognize the potential limitation compared to what we have in India and Brazil, where the government, the public sector, owned the digital public infrastructure as a public good and has used that to massively drive financial inclusion. NIPS have tried in terms of bringing down payment account to account interconnection fees at about 3 naira. But one of the things that we are yet to tackle because of that nature of private ownership of what should be a public infrastructure is that micropayments are still very expensive. Unlike what you have in markets like India and Brazil, where micropayments are free, and it has massively driven financial inclusion. The real money is what we do on the payment infrastructure and not how much we want to make in the private enterprise orientation on the payment infrastructure. And that's the contradiction between private ownership of what should be a national digital public infrastructure and public good and commercial interest. No matter how much our NIPS colleagues and the great public have done, but the DNA of the organization is always going to will always be an issue. We commend them for implementing technology, one person in the world, but that DNA issue is something the world needs to learn for. Maybe it's the way to go because Africans still don't have resources.
But I think it's you can say Africans still don't have resources, but Africans are spending on defense, Africans are spending on building roads. I think, and it's something about prioritization of national resources. At the end of the day, as the world gets more digital, then giving your citizens basic payments and digital infrastructure now becomes a priority, right? Especially with so many young unemployed. And so I fully agree with you on the idea of a public good. I think that's the friction we are seeing across the continent. In Kenya, for instance, there's been a big tussle about whether the Safaricom and the banks play a key role in the new national payment system. And, I think Safaricom and the banks got together and said, actually don't need one. The government should not focus on building one. Let us do it ourselves. It'll be a replication of efforts. And so you can see the same kind of energy that